Good morning, everyone. Welcome to Commodity Classic. The next few days are going to be quite amazing. I hope you enjoy it. Hi, I am George Goblish. I am from Vesta, Minnesota. I am a farmer. And these education sessions have been brought to you by a group of farmers that put these sessions together. So they're brought together by farmers for farmers. From the American Association of Soybeans, National Corn, Wheat, and Sorghum, and staff from AEM. Thank you to Farm Progress for producing this session. It's very appreciated. I think you'll get a lot out of this session. This session has been approved for CEU credits and for the CCA program. So if you're looking for these credits, sign up's in the back and go from there. There's also a QR code if you can do that. We'd also appreciate it if you could fill out those evaluation sheets you were handed on the way in. That just gives us information for next year's show, find out the interest out there and what we can do for you. With that, I will turn it over to Farm Progress and let them introduce our great guests. Thank you.
Good morning. How are y'all today? You might notice that I'm not from around here, although being in Houston, my accent isn't all that different. I'm over here from South Alabama. I'm the new editor of Farm Futures. He told me not to mention him, but you're used to hearing from Mike Wilson. And this morning we again have as our sponsors Channel, and Jared Thomas is going to come forward and speak to you a little bit about that.
Hey, good morning. As was said, my name is Jared Thomas. I'm the marketing lead for the Channel seed brand, and it's a pleasure to sponsor this event. We've actually sponsored it for the last 10 years. And I guess first, let me just introduce myself. I grew up in northeast Missouri. Also came from a farm. My dad and uncle are twins, and they farmed together in a small town of Madison, Missouri. About 2,000 acres of corn and soybeans, about 500 acres or 500 head of cattle. So I guess I say that because I know the importance of this topic. I actually talk to my dad about every day or every other day, and usually it's about how many calves you've had for the day and the markets. But lately he hasn't been wanting to talk about the markets, and I don't know why that is. Ed or Matt, maybe you guys can share with us a little bit about that here this morning. But obviously it's an important topic that is on everyone's minds, and it's something that we are excited to sponsor this event every year so that you guys can take away one or two things back home to the farm to make a difference in your operation. A little bit about the Channel seed brand. So I'm the marketing lead, and it's been a big year for us. As some of you that have been following us might have seen, we announced about 10 months ago that we're in the process of bringing together our 10 regional brands and our existing Channel brand. To form this new enhanced Channel seed brand. And you'll hear us talk about it around this new enhanced Channel seed brand. And what does that mean? And what does that mean for our farmers? Okay, really about four things. So by bringing together the regional brands business and the Channel business all together in this one brand, the brand's going to double in size. But that's not why it's important for a farmer. The first most important reason is we're bringing together products. So best of both worlds product portfolio is what we describe it as. Essentially, we're taking two exclusive product lines, bringing them together into one complete portfolio for our farmers. Second is we're adding agronomists. So we've added 20 agronomists across the United States to provide better agronomic expertise for you all as farmers every step of the way. Third thing is to speed up faster innovation. So Bayer Crop Science is putting a ton of focus and resources behind the Channel brand. And by simplifying the brand, it's allowing us to bring new innovation like Precion Smart Corn, new digital tools to farmers faster. And then lastly is just improving the overall customer experience. And that's something that we're looking at simplifying the experience for each one of you. So just wanted to put that, share that since it is a big step that we've taken this year. And if you want to learn more, we would invite you and encourage you to come by our Bayer booth to learn more about this new enhanced channel seed brand. So on with the presentation. As I mentioned, we're excited to sponsor this for the 10th year. Matt Bennett, he's a farmer himself. Many of you know Matt. We've had an exclusive partnership with Matt. He's from for 10 years. He's from Windsor, Illinois, a farmer himself, has a very relatable tone and approach to grain marketing. And then Ed Usset is also is from Minnesota, from St. Paul, Minnesota, and works for the University of Minnesota. Has a nice compliment to Matt and really simplifies the message down in a very easy to understand way. So we're excited to have Matt and Ed kick us off at this first early riser session. Encourage all of you to engage, ask questions, and make this an engaging session. Thanks again, and I'll hand it over to Ed.
Good morning. I'd like to start by talking to George. And George, you've already cost me $10. Matt Bennett said you'd do a good job introducing us, and I took the other side. It bothers me. It bothers me. This morning, time is short, but I'm going to talk about the third edition of my book that came out in October of last year. I'm going to introduce you to a few characters and maybe comment a bit on the current state of the market. I'm going to introduce you to some best friends. Matt and I have been doing this for 10 years. I'm going to reintroduce you to some of these cartoon characters I use to illustrate my ideas in marketing. And we're going to meet a couple more today. One of them is Barney Binless. Barney is my harvest benchmark to compare other characters to. A lot of people think my characters are silly, and they're funny, they're a cartoon. They have a serious purpose. I have 14 different celebrity marketers in my book. They each represent a different approach to marketing grain. Some use options. Excuse me. Some are focused on pre-harvest marketing, some on post-harvest marketing. A pre-harvest marketer is Terry Timer, my best one I have in the world of pre-harvest marketing. Among post-harvest marketers, I've got May Sellers, who holds grain in the bin. And by the way, do you know anyone who has last year's crop in the bin? Yeah, May does too. I also have Hank Holder, proven to be one of my more popular characters. He helps me illustrate some mistakes in grain marketing. But I've always separated pre- and post-harvest marketing to have a clearer view of the value on, if you will, each half of the football game. And some of you might ask, why don't you put them together? I mean, the marketing game, the pricing game, it's not just pre-harvest or post-harvest marketing, it's the whole works. Well, in this third edition, I have done that. So I'm going to introduce you to a couple of my newest best friends, who I'm going to talk about just briefly here. This is Tammy Two-Step, who combines pre- and post-harvest marketing. She combines Terry Timer's approach to pre-harvest pricing, which is price knowing your production costs, and if you see an opportunity above production costs, we're going to get something done in the spring of the year. Okay? She only prices her insured bushels, 80% of her crop, which is also the amount of storage she has for post-harvest marketing. So 20% of her price, at least 20% of her price, her grain is sold at Barney's harvest price, and it becomes part of the numbers I'll show you here. Now, she's got a twin brother, Tommy, and Tommy does the same thing as Tammy. The only difference between the two is that in pre-harvest marketing, every pricing step that they take in the spring, Tommy insists on re-owning with call options. That's the only difference between them. Let's look at 34 years of data. And by the way, I'm quite proud of the fact I've got over 30 years of data, real data, to analyze these people. There's Barney. He is our harvest price over the last 34 years in corn. By the way, these are Iowa average prices. you can see that Tammy has a 37-cent advantage over Barney. By the way, Tammy and Tommy, I charge them variable storage costs for grain held in storage. This is not storage free. That's 37 cents a bushel on every bushel of corn produced over a 34-year period. Tommy, a little bit less. Tommy's using options. In the long run, options, they might cost a bit, and that might sound like, well, don't ever use options. That's not what I believe, because there were years where Tammy sure could have used those options before harvest, and they give you some peace of mind. But both of them have healthy advantages over Barney's harvest price. Tammy is beating Barney in 29 of the 34 years. Nothing, people, is 100% in marketing. Nothing's 100%. I also like looking at years with a margin greater than 10%, and here Tammy has an advantage over Barney, 18-1. What I'm talking about here is, say Matt and I are competing farmers, and 1 year my average price is 10 cents better than his, and the next year he's got me by a nickel. Not a big difference. More than a 10% advantage. That's like Matt here at the end of the year, half the years. We compare notes at the coffee shop. I've got $4 corn, and Matt says I've got $4.50 corn. And the next year I've got $5 corn, and Matt's got $5.50. The difference is big. I compare it to my checkered career as a high school wrestler, and you say, well, Ed, were you a good wrestler? And I tell somebody, yeah, I pinned somebody last week. Oh, good for you. How often have you been pinned in the last year? 18 times. Am I good? You can see the advantage of pulling together pre- and post-harvest marketing through Tammy and Tommy two-step. Here it is on soybeans. That's not a typo. Tammy has garnered almost $1 a bushel increase, better than Barney, even though she's only beating Barney in 3 out of 4 years. Look at that margin on those large years, 19-4. In wheat, I use prices for hard red spring wheat out of the Red River Valley. Wheat is always the more difficult challenge for me in marketing, but Tammy and Tommy are finding an advantage. They're beating Barney more often than not. It seems to be working, and you can learn all about them in the book. I'm sorry about this, but I have to talk about it. 2 years ago, I stood up here and showed a picture of my son-in-law, who is a goalie for the Finnish national team, and he had just won a gold medal at the the Beijing Olympics. I won't show the picture again. A year ago, I showed a picture of him and my daughter, and he's got a gold medal from the International Ice Hockey Federation National World Championships, where the best of Canada and the U.S. and Slovakia and Switzerland and Sweden come, and he beat them all. He had another gold medal. 2 months ago, I was worried he got nothing to talk about. He's playing in Finland for a Finnish team, having a fine year. But then just in late December, he gets a phone call from a team in Switzerland. There is professional hockey in Switzerland. And now he moves to Geneva. They have an injury problem, and he moves to Geneva to play for a Swiss team. And oh, by the way, this Swiss team has qualified for the Champions Hockey League. This is the Stanley Cup of European hockey. For those of you, they take the best hockey teams in Europe from each of the professional leagues, 24 of them, just the best. And they go into a playoff mode for this best team in Europe. So think of it, for you people from Kansas. This is the Super Bowl of European hockey. So how do you think he did? Son of a gun, another gold medal. It's the first time the Swiss have ever won it, but you know what? They cheated. They had a Finnish goalie. A year ago, I talked about the coming boom in the soy crush capacity. I want to revisit that briefly here. I showed this map to you a year ago and talked about 16 planned expansions in the world of soybean crushing capacity. 3 of those plants have a red line around them. Those plants already opened in the last year. You're going to have another 2 to 4 open this year. And I want to revisit that topic right here just for a moment, because I'm thinking about marketing and I'm thinking about what rapid expansion in the world of crush could do to the soybean market in the years ahead. I know things feel very bearish right now, but I like to think there's potential for this to create some turmoil in the market. So just a little take on the issue, my take on the issue. This expansion is ongoing in the soybean crushing industry. And in my humble opinion, this reminds me, this is an echo of the boom that occurred 15 years ago in the ethanol industry. And that boom in the ethanol industry created a tremendous amount of turmoil in the market. It didn't just affect the corn market, it affected the soybean market, the wheat market, the oats market, it affected everything. And when we're in the midst of that rapid expansion. By the way, as I talk about this, there's a potential for great turmoil, but I want you to stay on top of it. And if you would, look up what Scott Irwin out of the University of Illinois has been writing and talking about on this expansion. Scott is, he's doing the math. This is all driven, of course, by anticipated demand for renewable diesel. Well, Scott is adding up the mandates for more renewable diesel, and he's adding up the incentives at the state levels for more renewable diesel. And it's an impressive number. There's an impressive amount of growth. But on the other side of the ledger, he looks at the growth in the soybean crushing and renewable diesel processing capacity, and in the next couple of years, it's going to outrun that demand by a big margin. Stay tuned. I'm not sure this is going to create, we're not sure where this will end up. There's a lot of unknown factors out there. But I asked the question, and I asked the question in my book. I studied this. This market, we're going to throw the market into turmoil, so should I change my marketing approach? You know, you go back to those glorious, that second golden age of agriculture, the year 2007 to 2013, maybe in a period like that, we should throw out Ed's characters. Let's go rogue. Let's do what we want to do. I'd like to show you the second golden age of agriculture. You're all wondering, was there a second who said there was a second golden age of agriculture? I did. I dubbed it that in a November column in Corn and Soybean Digest way back in 2013. I called it the second golden age, so don't doubt that. I'm comparing 3 7-year periods here. In the middle is the second golden age of agriculture, the minimum, the maximum, and the average price over that 7-year period. To the left of that is the 7 years prior to the second golden age, and to the right of that is the 7 years after the second golden age of agriculture. You know, sometimes we get too cute with charts. We put up too much information. Let's see if this helps. Do you know that the average price of corn during that 7-year period, the average price of corn, was higher than the maximum price in the prior 7 years and higher than the highest price in the next 7 years? That's some good times. So I decided in this third edition, I've got to look at how some of my characters did in that specific period of time. So let's look at Terry Timer, my top performer in pre-harvest marketing, and let's compare her versus Barney in each of those 7-year periods. Do you notice something? Terry's beating Barney in all 3 of those 7-year segments. And you know, during the second golden age of agriculture, Barney kicked Terry's butt a couple of years. And yet Terry managed to average 21 cents a bushel more. After harvest, post-harvest marketing, I'm so down on Hank Holder, holding grain too long. You've heard me talk about him before. We're looking at May sellers. May and Hank are holding unpriced grain in the bin. May sellers gets out of the business by the end of May. Hank Holder insists on holding it all the way to the week before the following harvest. And I said, don't be Hank. But do you notice May's advantage over Hank in each of those 7-year periods? You want to know something interesting? Between 2007 and 2013, Hank Holder beat the hell out of May in 2 of those 7 years by big margins. That included the drought year, 2012. Hank had a hell of a year that year. He had 2 great years in that 7-year period and managed to average 76 cents less than May. What does that tell you, people, about the other 5 years in Hank's portfolio? Don't be Hank. What is my conclusion from this? Should we change our approach if this expansion in the soybean industry brings back volatility and turmoil? Don't change. I'm going to do something I've never done before, people. I lugged down here, and I emphasize the word lugged, 150 pounds worth of books. And at 1 o'clock today in the Farm Progress booth, this book, which sells for $39.95 online, plus shipping and handling, it's going to cost you $45. Today and today only, with my signature, $30. Bring cash. And you're saying to yourself, you said that this SOB from the University of Minnesota, he's come here to line his pockets. 100% of the proceeds go to the University of Minnesota. That's a fact. That's a fact. And you're wondering, what will the University of Minnesota do with this number, this cash infusion? You know what it costs to get a left tackle nowadays? I hope to see you a little bit later today. People, I got to put a positive note on this current bear market. So for my latest column in Corn and Soybean Digest a couple weeks ago, I noted that our highest price so far this year happened in the first 2 days of January, the first 2 open days of the market. And we've been heading lower ever since. And it struck me that January highs are not common. It's not common to set highs in January, so I did a little analysis. I went back 20 years and looked at cash price, the high price in the second column. That's the highest cash price, Iowa average prices, in the month of January in each of the last 20 years. And next to that, I put the highest price in the subsequent April, May, June period of those same 20 years. And then the change is on the far right. Note that in 16 of the 20 years, the corn market found a way to take out those highs set in January. Now you're saying, so Ed, you're guaranteeing that we'll get back to $5 corn. People, I don't guarantee anything. But I think this is strong evidence that it could happen. You have another question, don't you? Like, well, what's going to make it happen? What's going to make this market rally? Not a clue, people. Not a clue. All I'll tell you is that Matt and I could lay out 10 reasons why this market would rally, and we live in a world where the 11th reason will make it happen. But this gives you, if you've got unpriced grain in the bin, do I believe you're going to get a second chance at a better level later in the spring? Yes, I do. I sure hope you do. And if it happens, please get it done. By the way, this is the same looking ahead at the December new crop contract in corn. Did we get a rally? Yeah, 17 out of 20 years we took out the January high. Is that a guarantee we'll take out the January high again, which is 50 cents away? I don't guarantee anything, but I like to think you'll get a second chance. Soybeans are always a little less reliable, but there's pretty good evidence that we got a shot again in the spring. It's late February, people. It's late February. We got a lot of time. We got a few months. New crop, same thing. I need to close out here. I want you to know I do teach 2 courses at the University of Minnesota. These are available to you remotely. And if you know anyone, a son, a daughter, yourself, you want to take a course, you don't even have to come to Minnesota. You can take it remotely, listen to me online, etc. If you're interested, let me know. And if you do take my course, you can visit a website called ratemyprofessors.com. I'm thinking of this sheet of paper you have in front of you. We expect critical comments from you. And I thought to inspire you, I would show you, you can go to this website, it's real. And you can read the comments I'm about to show you. This is about me and my class. Probably the best professor I've ever had. Great lectures, very knowledgeable. I'll try not to hurt myself, patting myself on the back. There are other opinions, though. I don't understand some of the language and found the material painfully boring. Not boring, painfully boring. And finally, OMG, he's the best teacher ever. His tests are super easy. Okay. Well, I've taken enough of your time. Matt, as you come up here and take over for me, I have a bit of advice. It's okay to be a little boring. Don't be painfully boring. Thank you.
I usually like to roam, but I'm not going to roam today. Obviously, it's a rough year, tough year to market. I understand that. How many of you feel like, though, 23 might have been one of the most challenging years you've ever seen as far as marketing was concerned? And I agree with you. We're going to talk a little bit about current fundamentals. We're going to talk about, well, unfortunately, I got to my funny slide. I didn't even get a chance to set this one up. Dadgummit. I'm having all kinds of problems this morning. We're going to talk about, though, basically, it comes down to more than just the price of corn and beans, correct? If we think about the things that really hurt us, it was because we spent too much money on fertilizer on the 23 crop. And then what did we forget to do? Sell some corn, all right? And so, I really enjoy what Ed has to say. We talked about it a little bit at supper last night. My approach is a little bit different, but one thing about it is that I want to stay consistent in what I do. Okay, and so one thing that we really screwed up for the 23 crop is that we just didn't take what made us made a decision, for instance, to plant a lot of corn and to buy all the inputs. We didn't sell corn at the same time. The economics of the situation is why we were planting corn. I want to talk a little bit about, the last couple years, and then I want to talk about what adjustments should we be doing. How many of you feel like we need to be tightening our belt right now? Absolutely. I couldn't agree with you more. I already messed up my good slide. But the USDA, what did they tell us in February? They said basically everything we grow is in a deflationary environment. All right, so we continue to devalue these commodities. People who are pushing the weight around as far as big money goes, they continue to invest in equities. You can see what's going on as far as what the funds are doing, and they've sold the daylights out of the corn market. You're looking at a short. I'm going to say at the end of last week at 340,000. They were talking as of Tuesday though, so you're probably talking 1.75 billion bushel short that the funds are, and obviously they've got to do what to that short at some point? They got to cover it. But guys, how many of you feel like that rally could have a little bit of something on the other side of it? I mean, how many of you are holding on to way too much old crop corn? There's like 10 honest people in this room, correct? Right. That's an issue. There's no question about it. So let's talk corn. How many of you guys have gotten excited at every single rally we've seen here lately, and then you get pretty disappointed on the flip side? Anybody? This is a live view of what rallies have looked like lately. And I have to use some comedy this year. I think Ed would agree. If we don't, people are going to get aggravated because it's so frustrating to watch. But let's talk world corn supply and use. World corn, at the start of the marketing year, you're talking 300 million tons. At the end of the year, you're talking 322 is what the USDA says. What is this in simplistic fashion? We are producing more corn than what we are using. If that is the case, what does that mean for prices? Lower, absolutely. What about the U.S. balance sheet? Now, there's a lot of things we can discuss here. But again, 1.3 billion bushels to 2.1, that's an 800 million bushel increase. What should that mean for price action? Anyone? Lower, right? And so what's the big question? How much of this is in the market currently, correct? And then looking forward, what does this do to our balance sheet? So this is what we use to forecast with ag market. And bottom line's this: if I'm using Farm Futures 92.8, and no offense, guys, but I sure hope you're wrong, okay? We don't need 92.8 this year. But if we use 92.8 and I carry the 2.17 into my balance sheet, if I get over here to a 178 yield, which would be another new record, just barely, that would give me about a 2.7 carry. If I get up to a 182, and how many of you guys think we could see a 182 this year if Mother Nature cooperates? Because if you can see a 177 in 23, I think you can see a 180 plus, correct or not? Guys, we had some pretty tough weather at times this year. Well-timed events for rain, there's no question about it. But you get to a 3 billion carry of the 182, and that's just a little bit scary. Now, what have we had going for us over the last year? All right, the 4 states from Kansas up to North Dakota had increased production from 22 to 23. Obviously, it was a drought, correct, in 22? It wasn't a banger of a crop in 23, but it was a pretty darn good crop. And so what happens is whenever you have a really tough crop in 22, those 4 states have what in common? What do they have in common? What do they have a lot of? You got a lot of cattle, correct? What's that mean? They've got a lot of usage for what? Corn. And when you don't raise the corn, what do you have to do? You got to go get it. How do you go get it? Basis. Anybody for the 22 crop enjoy a good basis compared to normal on your operation? And if you don't raise your hand, I don't think you were paying attention, because most people should understand how this worked. All right? So if I look at my local situation, this was in Illinois with a 215 state yield in the middle of the heartland where Decatur's at. 704 was the cash price, but that's not what I see as important up here. Obviously, that was a good day. 25 over basis whenever Illinois just raised a 215 bushel crop. Now, when's the next time you're going to see a statewide yield that is a new record by 5 bushels in a basis at the end of the calendar year, 25 over? When are you going to see that again? I mean, it's probably not going to happen, you know. And so you look at how does it compare to this year? 473 with a 2 over basis. And obviously, this was the end of the calendar year 23. A lot of people at the end of the calendar year 23 are saying 473 doesn't work for me, right? How many of you guys wouldn't mind having 473 today? I mean, you know, here's the thing. Sometimes we get wrapped up in the wrong things, all right? I know a lot of you folks have said to me, maybe not you personally, but several folks have said to me, I can't make $4.50 corn work or $5 corn even work. Because in the summer of 22, I sold corn for $7. Has anybody heard anybody say that or said that yourself? Well, whoop-de-doo. What's that got to do with anything? You know what I'm saying? Like, that is not what we need to be basing our marketing decisions on. So you ask, what would our export situation look like? Okay? As far as exports are concerned, freight on board, we're actually pretty competitive right now. As you can see, Argentina's a little cheaper, Brazil is a little higher. This was as of after the close yesterday, so pretty current type of prices. Our exports have actually performed fairly good. Now, what would cause exports to actually be better than the USDA? If Brazil would have issues, okay? If the safrinha crop has issues, there's no question you could see this improve even more. So I don't even want to explain to you exactly what this means, but you see this little thing on the lower says corn was the most hated commodity on the planet, and that's the truth. One of the guys on my team put this together, and what this is how do people feel? What's the sentiment with the market? You know, if you look at options, are options cheap or expensive right now? Volatility's down, options are pretty darn cheap. Bottom line is nobody wants to own corn as of the end of the week. Now, I know we were down just a little bit this morning, but as of the close yesterday, guys, we were pushing a 20-cent rally off the low. And a lot of us in this has said, hey, we could see a 30, 40-cent rally. Well, maybe we've seen half the rally already. I don't know. I don't want to be super bearish on you, but I'm telling you, a lot of folks have been. Another bearish slide, of course, is just pointing out, lowest close we've had in 4 years, okay, whenever we're looking at this corn market. Obviously, you've rallied off of this low. We're trying to set a little bit of a trend line here. I can't call it a low just yet, but I say it sure looks good for me, at least compared to what last Wednesday, Thursday, Friday looked like. It was a pretty tough market. And so that's your December corn market. And once again, you know, I think Joe Vaclavik talked about this a little bit this week. Guys on my team were talking about it. December corn, 2015 through 19, similar situation. We had a lot of stocks. And I will tell you this. Last time we had a 2 billion plus carry was for the 2018 crop. You know what the average cash price was then? 366, okay? Just to give you some reference. But what Joe said is if we made the low, the smallest increase in percentage off of the low in those 2015 through 19 years was 11%. And so if we made a low right around 450, that means we can make a case for 495 corn. Here's the problem with the 495 corn. How many of you guys would love to sell corn today at $5 or $4.95? Yeah, I don't believe you. Because if we rally to $5, what are you going to do? You're going to get bullish, right? You're going to get bullish. This is not the year for that. This is not the year for that, all right? So we're going to get into more detail on selling here in just a minute. I'm going to talk world soybeans really quickly. I'm not even going to talk the world balance sheet. What I'm going to tell you is a lot of folks have talked about getting bullish over Brazil, right? You get bullish because Brazil's had tough weather, but keep in mind, Argentina is doubling the size of their crop this year, which is 25 million tons in excess of last year. You want to get bullish on me, take Brazil down 25 from last year. The problem with that is that Brazil planted 3% more beans this year. So it's tough to get them down 25 million tons. The U.S. balance sheet at 315 is the highest that we've seen since 2019. Average cash price in 2019 you don't want to look at. Okay, but you can actually see it on this next slide. If you go to 2019 down to the bottom, what was the average cash price? $10.80. All right, so obviously we're looking at more stocks than what we've been used to. It's not grossly more, it's more. I expect crush to be very good this year. It's stayed very solid, but if I project into this year, I used 92.8 for corn simply because that's what Farm Futures forecasted. It's probably the most bearish number I can see happening right now. But I'm going to use 87 for soybeans because that's pretty much where I think we'll land, 86 or 87. If I keep demand constant once again, at a 52 bushel yield, you're at 472. Now, obviously, you get to a 55 bushel yield, you're at 700 or above. I don't necessarily expect that, but it's always a possibility. And you need to understand as a producer, what is your game plan if you have a 3 billion carry on corn or a 600 or 700 on beans? Because what will that do to price action? Guys, we think it's bad now. What would that look like? It wouldn't look like much fun at all. I put this slide up here to show you Brazil, 18 straight years of increased planted acreage. All right? So what's happening right now? Who's the #1 world corn and soybean exporter? Brazil. We are losing market share every year. That's a fact. All right? I don't expect the trend necessarily to change. I do have some things that I want to throw at you, though, that I think could be good. But the Brazilian farmer says that this Brazil crop might only be 135. This is the lowest estimate I've seen. And so I bring this up. How many of you guys feel like the U.S. farmer is honest with the USDA when they're projecting their own yields? Because your neighbor comes over, and what do you tell your neighbor? Well, look at my corn. It's got to be 250, right? I think it's great corn. And then the survey lady comes around and says, well, you've been dodging my phone calls. I want to ask you about your crop. You say, well, it'll be lucky to make 200. I don't know, it looks terrible, right? True story or not? Guys, the Brazilian farmer is probably lowballing. I don't think it's 135. This is very important though, because this is one thing that could quantify prices as we move forward. Are we down into the low 140s? Are we mid 140s? I don't know. I can't tell you. I just can tell you this. There's been very challenging weather. This is what it looks like over the course of time, South American exports versus U.S. exports. And once again, we continue to lose global export share. It's a concerning trend, but I do think that if we can use more beans domestically, and I'll talk a little bit about what Ed was talking about in a second, I think that it would be significantly better for us than if we're exporting half of our beans every year and we're basically relying on our trade partners to not get their nose out of joint, okay? Because when they do, what happens to soybean prices? They move lower. You guys know that as well as I do. Joe Vakovic sent me this slide we were on a podcast here 2 weeks ago, and I said, I need this because it shows you, it essentially shows you the difference between where our exports and crush have been, and you continue to see the domestic usage for soybeans go up. This is good in my opinion, actually, because now we're more self-reliant, especially if we can rely on this renewable situation. Now, why are we not exporting soybeans? I'll just show you right here. We're about 40 to pushing $45 a ton higher than our main folks, Brazil and Argentina. Brazil's got a captive supply right now. We're just not going to export many beans right now. We simply are not competitive. And then that's the chart. It's pathetic. It looks ugly. Obviously, I mean, last week we were really hoping to see this summer low hold. It didn't. Does it open the downside up significantly? I would say that potential exists for sure. If I had old crop beans, we've been saying for a long time, just get down to gambling bushels. But bottom line is this bean market, as soon as you give up, what's going to happen? You go up $1. And for what reason? We don't know. We've got no idea. But how many times have you seen $1 rally in the market, on the soybean market, and you have no idea why it did so? It happens, okay? But that doesn't mean that you don't market if you're still able to make a little bit of money. And then again, on 24 beans, you're down here at a level where you get much lower. You're not going to have $11 fall delivery beans anymore. All right, we had $13 available to us. We couldn't make that work because of $16 the summer before. We had $12. We couldn't make that work. All right, so if we can't make $11 work, how's 10 going to work? All right, at some point, you got to do the math and say, can I make money at $11 beans? Because how many of us would have given our right arm for $11 beans for most of our career? I know input prices are higher. I do know it. But I know a lot of the growers I work with can make money at $11 beans. So managing risk in 2024. This could be something positive. My buddy Eric Snodgrass sent this to me. We swapped slides all winter. He's saying that he feels like safrinha could stay in this hotter, drier pattern with intermittent bouts of rainfall. If this would happen, the safrinha crop could be under a bit of pressure. Now, I've been saying this winter, I don't wish ill will on anybody publicly, okay? You know, it wouldn't be the end of the world, okay? I don't want anyone to have ill fortune. I don't. But guys, you've got a couple, three things that could rally this corn market. An issue in safrinha crop, a surprise on the bullish side on corn acreage, which I don't think is going to happen because I think we quantified a lot of that with the fall run for anhydrous, and we had really good weather. And the last thing would be U.S. weather. This would be taking one of those away if they do have weather issues. You look at Drew Lerner. Drew Lerner says we could be looking at below normal rainfall in the western corn belt this summer. Why is he saying this could happen? Because of the rapid demise of El Nino. Now, I don't know if it's going to happen anymore in the man in the moon. But here's the thing. If I'm going to get in the mood to sell corn, and I'm going to sell a lot of corn when I get to $5 and $5 and above, be careful. Especially if you're in one of these situations where you could end up getting hot and dry. You don't want to be the one that oversells in a year like this. Now, it might not go to $8 like it did in 2012, but what if you have to buy some sales back at 50 cents over where you sold it at? That's not a position you want to be in. Now, Ed talked about renewable already. The only thing I want to point out on this slide is that you've got big energy investing in renewable plants. This is a thing that we should know and understand what the significance of it is. All right, so what's going on? You get into California and you're not going to be buying conventional diesel. If you see here, what problem do you see with this particular slide? I'm gonna talk about renewable and something else. If you go into California, what you will see is that you can't get anything but renewable diesel. All right, so B20, what's the percentage of soybean oil that goes into B20? 20%, thank you. Lots of times people just sit there and I'm like, guys, it's not a hard question. Okay, but what about renewable? What percentage of soybean oil can go in renewable? 100. So here's the deal. If you are conventional diesel is what you're selling and no longer selling it in certain parts of the country, what are you going to do? You want to participate, correct? What are you going to participate in? You're going to participate in tax credits. And let me tell you something, renewable diesel can't stand on its own. Neither can sustainable aviation fuel. But one thing I can tell you is that sustainable aviation fuel, you're talking ethanol, big energy. I mean, big energy is actually getting cozy with ethanol. Why? Because they have a common foe. And that's what's going on. And if I can draw these lines, it means big energy actually is a friend of agriculture in a way right now. And that's a really good thing. It's probably the best development we could see, because you see the increase in demand for sustainable, it blows away renewable. The bottom line is, if we could get the tax credits for corn-based ethanol to be a part of this sustainable situation, it could be huge. We're supposed to get an announcement this week. It's going to be very important to watch that. Now, what's the U of I say about crop rotations? Because I've got to decide, if I've got swing acres, am I going to plant corn or beans? U of I says right now there's a $100 in Illinois. Now, I know most states are going to be fairly similar, but a $100 advantage to planting soybeans over corn. Now, this is a big deal, and here's why it's a big deal. Because whenever we were doing our inputs and deciding our rotation in the fall, what penciled better, corn or beans? Corn. It pencils better. We're going to go ahead and decide we're going to fertilize and plant corn. But once again, what did we forget to do? What made us make the decision was the economics of the situation. So if the price of corn helped us make the decision, sell some corn. And a lot of folks told me, I have no hurry because fertilizer is so much cheaper than a year ago. But corn can't go down any lower. And when you tell me that, I go buy puts. Because when that mentality comes into play, it's a problem. What do the U of I say for break-even prices? And this is depressing, okay? This is using $360 cash rent. They're saying break-even prices right now in this part of Illinois is $5.18 and $12.22. I know it's not pretty. Now, I will tell you, I see a lot of phones coming up. I'm going to give you a QR code at the end where you can have my slides, okay? But how are we going to make these prices work? No idea, right? I'm sorry. I just don't know, okay? No, I'm not going to leave you with that. But let me ask you a question as we're trying to wrap up here. Does a $1.65 to a $1.80 nat gas equate to $100 or $700 anhydrous? Not even close. If I'm still planning on planting corn, I'm not getting in a huge hurry on anhydrous. The other thing is, I've told people, if you can side dress, people tell me, well, I haven't side dressed in 20 years. I'm darn sure not going to do it now. Well, good for you. Maybe this is the year we do a few things we haven't done in a while. Maybe I'm a little more flexible this year. Maybe I'm out of my comfort zone this year. Because the bottom line is, I'm not paying $700 for anhydrous this year with $450 on the board, $460 corn. Does that equate? Does it work? I just showed you it doesn't work. So be very careful here. What's the cost to own your old corn? I mean, I will tell you this. 3 cents a month for corn, that's if it's in your bin. You got to understand, like Ed said here, if you're going to hold this thing out to next fall, what's it going to cost you to do it? What if you're storing it commercially? Add 3 or 4 cents to that. Guys, it's a concerning situation. I don't want to hold on to too much stuff for too long. If you guys want to stay long, again, you can buy some options and keep a leg in it, but the bottom line is you've got to get out of some of this old stuff sooner or later. So I just put some of our strategies that we did. I'm not interested at the bottom, as I can say, selling calls on greater than 40% of an APH. And I never sell calls on a crop that I'm planting unless I have what I call insured bushels. I've got to have a crop insurance plan. But I do like the idea of getting some sort of ownership on this old crop if I'm moving it. Sometimes buying a call allows you the comfort to go ahead and sell the corn. So if that's the case, do so. And then this is what it looks like as far as soybeans are concerned. And once again, you'll be able to get this. Now, what time we got, Ed? Or Mike? 8 minutes till. All right, really quickly, I want to show you something. And I'm talking quick. This particular producer has a 220 APH, a $250 cash rent and land cost, $100 chemicals, 210 fertility, and 120 seed. All right. If you look back there, we sold corn whenever we were buying our fertilizer. How does that factor in? Well, we sold about 20%. The price we sold it at was $5.20, and I'm not trying to Monday morning quarterback you. I'm just telling you this. My break-even price on this particular farm originally was $4.34 a bushel. But whenever I sold and locked in the ratio of fertilizer to the price of corn, all of a sudden now I take my break-even from $4.34 to $4.12. And then we stepped in and we bought March short-dated put options, which we do a lot of times in the fall. Why do we do that? To lock in insurance price. We bought $5 puts and sold 550 calls for a nickel. We did 50% of our crop, but I'm just going to throw in this situation 100,000 in, and then I'm going to, and I think that's 100. I can't even tell. Is that 100 or not? No. Yeah. Well, now I'm way too far. Sorry, I even have my glasses on, but I'm going to call that 470 just to be fair. Now, what's your break even? $3.34 a bushel. So, how important is it to sit here and market versus your break even? I think you can see it. I'd give anything to have a break even on most of my guys under $4 at this point. So if I will tell you the app, we just designed a new app. If you go in here and you click on the QR code, since you're here, if it's downloaded today, you will get more information if you choose so about our app, first of all, at a 25% discount, mind you, all right? But if you want the slides, you can also do so. What this will do, it'll take you to a page and it'll explain all that. All right, so just snap on that QR code. If you want to come to our booth, we'll have it there as well. At our booth, it's on the 3rd floor. We have a shotgun raffle. A lot of people have enjoyed that. We're not going to give you the shotgun right now, especially the way the markets are going. But you should come by the booth and sign up for that. And then Channel also offers a newsletter for me 3 times a week. And this QR code will take you directly to that, where you get it for free. It's no obligation. And so, Mike, we'll go ahead and do questions. That's fine. Pam, oh, I'm used to Mike doing questions. I'm sorry. So this is Pam's first time, and she took us out to a really nice meal last night, didn't she, Ed? I do have one more thing, though. It's my risk disclaimer. You can't hold Ed or I liable for anything we said this morning. All right, let's roll.
All right, after listening to these two, all the market volatility we hate, I'm thinking we need a bull that jumps high and twists around a little bit before it comes back down. Mike is out here. He is prepared to sprint because we only have a few minutes. Who's got a question? Here we go. George.
Hi. With the oil coming, we're going to be producing a lot of soy oil in this country. What are we going to do with all the meal?
You know, we had the same question 15 years ago on DDGs from ethanol. And what are we going to do with all these DDGs? Did we have a problem with it? You ever hear anything about we don't know what to do with DDGs? I heard someone suggest to me, a half a year ago, that we're gonna take the meal and take it to landfills because we don't know what to do with it. It will not go to landfills, people. We'll figure it out. The market will figure that out. I don't think that's going to be a big issue. I guess if I'm a soybean meal buyer, I'm going to feel good about the fact that meal prices might be lower relative to other feed costs, but we're not going to put it in landfills. The market will figure that out.
I think two things. I think that Argentina, in their heyday, is 50% or more of world soybean exports will be over with as we move forward, because I think we'll be exporting more. The other thing, if I was a young producer and I was close to a crush plant, I might consider livestock production expansion. You know, if you can make that work, I do think those opportunities will exist. If I've got a captive supply of soybean meal, I think it will be relatively cheap, comparatively speaking.
Mike?
Being on a co-op board and talking to other farmers in the Northwest Iowa area, I anticipate if there is any kind of futures run up, I anticipate basis is going to fall out of bed and kind of even those things out.
I've been talking about that all winter, and that's kind of what I was alluding to, but since Ed and I have 20 to 25 instead of an hour like we usually go, it's hard to elaborate. But here's the thing, when you've got 9 billion bushels of farmer-owned corn, if you get this short covering rally from the funds, the thing that will happen is that the elevator is going to have to say, hey, pump the brakes here. We're going to have to back you off of hauling corn in because they can only handle so much. Your basis will widen. So I've been saying if you get a 40 to 50 cent rally, ultimately your cash price, in my opinion, you'll be lucky to get 2/3 of that rally, but that's just my opinion.
To support your rally theory, was Monday morning a key signal on the charts for the corn market?
I mean, you made a new low and you closed higher, and then you affirmed that on Tuesday and Wednesday. Is it a reversal? It's a reversal for now. You're going into first notice day. So there's a lot of people, in my opinion, that just gave up last week. That's what Wednesday, Thursday, Friday was all about, in my opinion. A lot of pressure on the market. Again, it was just a give up point. I would say we have an intermediate term low. That's my opinion. I've thought that we've reversed this corn market more than once this winter, and we didn't. But this is the best indication of a reversal that we've seen so far.
All right, well, I don't see any other questions. We're running tight on time. So I invite all of you to come down. Ed will be at the Farm Progress booth. 4146 is downstairs. Look for John Deere and go back. And he'll be there at 1 o'clock signing books. And Matt's booth is up here at agmarket.net. You know the number?
I think it's 6005 maybe.
Yeah.
I believe so.
There you go. So go see both of these guys, ask them questions. Keep reading Farm Futures, where we have information from both of these fellows. You've been coming out 10 years to listen to them early in the morning. Farm Futures, thanks you very much. Channel, thanks you very much. Have a great show.